just give us your view. I know you were listening into that conversation in terms of when we could see the interest rate cycle turning in South Africa and whether you concur when it comes to the inflation outlook in the country.
I think that there's a couple of factors that we've got to keep in mind. Obviously, the world at the moment is concerned around the inflation outlook. In South Africa, we remain within that target band, as Gina mentioned earlier. But more importantly, I think where the pressure is going to start coming in is from our global pressure. If you look at the BOE minutes today, we saw them mentioning things like data isn't sufficient to push for an interest rate hike right now, despite the fact that they're actually well outside of the inflation band. I mean, they're sitting at 4.4% and their band sits at 2%. So I think in South Africa, we're also going to be in a scenario where we want to see data coming through that indicates that inflation is in fact a real issue. The exogenous factors being that they're not demand-driven, that consumer-led inflation is something that we need to concern ourselves about in terms of the fact that we import inflation and the fact that the oil price we can't control necessarily by monetary policy. Yeah. So I think that from tomorrow we're definitely going to see a flat rate decision, but more importantly I think it's going to be interesting to see what the Reserve Bank's outlook is in terms of their view around the inflation targets going forward.
You know, Brigid, it's so interesting. End of last year, we saw the bank saying that they're going to push ahead when it comes to reserve accumulation to try and weaken the local currency. I'm sure they're sitting back and watching that oil price and also all the global events that have ensued. Do you think they're going to put the brakes on reserve accumulation and keep the local currency where it is at the moment, below 7 Rand to the greenback?
Well, I think that the kind of statements that you've seen that have come out of the SARB itself have been around containing the volatility levels on the rand, not necessarily weakening or strengthening the currency, and that's something that we need to keep in mind. So I think for now they will continue to keep it maintained, and if you see how the currency itself has reacted under the duress that we've seen out of the likes of the Eurozone, it has remained relatively range bound. In fact, we've traded within a 5-7 cent band, which relative to what we're seeing in our counterparts in Europe is relatively small.
Brigid, in terms of your rand play ahead of the MPC rate decision today or tomorrow, what are you going to be doing in today's session? How are you positioning yourself when it comes to the rand?
Well, we haven't seen much movement on the currency. We've seen it well supported up at around the 7 handle as we've seen exporter interest come in at those levels. I think that we can expect to see is some support of the currency if you're expecting rate hikes to come through. We're starting to see that sort of play and we're seeing it globally. For now, we're unlikely to see that kind of outcome, so I don't think there'll be much movement on the currency ahead of the MPC decision tomorrow.
Okay, well, just looking at the local currency going forward when it comes to the debt crisis in Europe, Portugal deliberating over austerity measures versus getting a bailout. We had the UK budget in today's session. We had the ECB perhaps alluding to an interest rate hike in April. How is this all going to affect flows into the local currency?
I think what we're seeing at the moment is the global community is very concerned about the inflation outlook, and as we are in South Africa. But the bigger picture here really is to say, how do we combat the inflation outlook without hampering a growth outlook? And that's really where the big dilemma comes in terms of the central banks managing monetary policy. For now, I think we're going to see a stable rate environment for the foreseeable future. We're certainly going to see a lot of hawkish comments come through, specifically like the ECB recently. I think they're managing expectations. Whether or not the proof of the pudding will be in the eating, time will only tell. But I think that we've probably got a longer horizon in terms of interest rate hikes, probably around November or the last quarter of this year at the very earliest, and if not, the beginning of next year.
You know, when you look at what PMICO has done recently, and everyone's keeping a close watch on them, they have completely diluted their holdings in US Treasuries. We've also seen them cite inflation as a growing concern going forward, talking about the degradation of sovereign balance sheets as an issue. Emerging markets used to export disinflation to the developed world, that is going to change. And also the fact that populations age, they tend to save less and consume more. So some of the factors that they're citing, do you think that could filter through into the South African case?
I definitely do. I think that our bond market at the moment is relatively strong. I think that we've definitely got some sell opportunities. We are seeing inflation as something that's going to push the curve a lot, specifically in the longer end. We are looking for bonds to trade specifically in the 157s, closer to the 8, if not 820 levels, as the inflation picture starts to gain momentum.